Well, let's do both. So, Taiwan, okay. to Emily's point, and Japan, is that where you want to position to get the, how can I describe this, the first mover advantage into AI? And broadly, when you consider this renaissance that's been going on in Japanese equities, is that looking overcrowded and a little bit overdone now?
Well, I definitely want to answer that. But first, I'll answer the question on semis. We should broaden it out to include South Korea as well. Japan, Taiwan, South Korea in the short to intermediate term. I think in the long term, there will be implications for India as well. It's very early for that. But if you look at wafer manufacturers, SPE companies, chemicals, memory, in those three markets, there's plenty of opportunities. It's still pretty early. You can extend that to the back end. I think this is an underappreciated area of the semi-supply chain. Packaging, wire bonding, foundries, OSATs. Foundries not so much, that's known. But the OSATs, the assembly and testing companies, there's going to be very large incremental demand for them as well. You go back into the chemicals, the substrate companies, advanced packaging, that entire supply chain is present in Japan. Now, to answer your question on Japan, how should we be positioned? It's still relatively early in a long-term equity appreciation cycle for Japan. That is our view. Martin spoke to our team sensei, Carl, about a month ago, and he went into great detail about why we are excited about that market. In brief, to summarize what Carl said and what he and Martin talked about, you have high single-digit, perhaps even double-digit earnings appreciation or earnings growth compounding every year. You have share buybacks, higher dividend yields, and accompanying that or following that should be a re-rating of the broader market and of many of the sectors. So we remain very constructive on Japan as well. It's not too late.
Yep. Yeah, Vikas, I enjoyed that conversation with your colleague. So, it sounds like a great recipe, but is it going to be enough, including all the AI stuff you just talked about in Japan, to propel the Nikkei back to peak Nikkei, 38,000? We're about 15% off that right now.
We are a little bit off it. I think there will be more peaks in Japan over the next few years. Calling the timing is difficult. Unfortunately, we don't do that. But if you look at the aggregated opportunity set, the discrete opportunities we're seeing across sectors, it's not just semis, it's in financials as well. You were talking about interest rates in Korea at the start, and Sherry was commenting on that. I was thinking at the time, I actually don't spend too much time thinking about interest rates in South Korea. We do a little bit materially more so in Japan, and that's why we are positioned the way we are in the financials. If you look at the automotive supply chain, the battery supply chain, there's a lot of opportunities in Japan, and it's just beginning. One word of caution, however, is I think in the last couple of quarters, or at least in the most recent quarter, some analysts and investors have started extrapolating a yen going to 140, 150, 160 even. I've seen some headlines about that against the dollar. We should be wary of, or at least cognizant of, the impact to revenues and earnings from a much weaker yen. There's a probability, there's a plausible scenario where the yen strengthens from here, and we've started to see a little bit of that. That notwithstanding, the long-term opportunity set in Japan is quite broad, it's quite deep.